So HFR is expanding its crypto hedge fund indexing and classifications, essentially
Yeah.
getting more specific about the types of subcategories that go into crypto hedge fund. Tell me why you're making this change and what it means for your business.
It's an exciting time because the industry has evolved a lot. We first launched these indices back in December of 2017. So it was a bit ahead of its time, I guess, 8 years ago. And really, what we do is, and I think it's very important for investors to understand the complexity and sophistication of the things that we're doing. And essentially, we're unboxing the black box, meaning we're outlining what it is that people are doing so that investors can take advantage of these advancements in sophistication and access these really high returns, but also use it to manage the volatility of their investments.
How do you choose what to prioritize in this new classification process? What areas of crypto are most pressing when you're going through this?
Yeah, the managers are providing the information to us, and we have basically culminated a 2 year project of really analyzing the descriptions and the performance of these funds so that we can have this cutting edge system for really allowing investors to understand all these different nuances because it's not just about beta anymore. And maybe it was that in 2015 or 2017 or 18, but there's so much more that people are doing now, and it's so interesting that we had to sort of bring this forward so that people can use that to make intelligent decisions about how they're investing in crypto.
What does this new classification system mean for investors or for those in the crypto space, especially if they may not be familiar with how hedge funds interact with crypto?
Yeah, I mean, it's a huge growth area for the industry over the next 5 to 10 years. I mean, you take the total size of the crypto industry, call it $2.7 trillion. The total size of the hedge fund industry, call it 4.3, $4.4 trillion. And the total capital invested in crypto hedge funds is just a fraction of that. And so this is a huge area of growth, and it's a great way for investors to access these sophisticated strategies by people that are very specialized in this type of investing, and gives them an option of something that's different than a totally, a very simple ETF or something like that, a passively managed strategy, which is a part of it. But there's also more sophisticated ways. And February is a perfect example because we've seen 25% reversal, from the highs in all of these cryptos. And so, yeah, the returns are great when you look over a few years, but you're going to have really volatile months. And that gives investors a better way to invest, managing that volatility, but still accessing great performance.
What does growth or the evolution of crypto hedge funds look like? You're making this change because there are more specialized funds, but what does the space look like overall?
Yeah, it's really specialized, innovative. It's really the most innovative part of the hedge fund industry is what people are doing because all of the mechanisms to trade this continue to evolve. There's arbitrage strategies, and there's so many different players that have come into the market. It still is primarily most of the investment in crypto is still held by individuals and institutions, but we're really seeing this as a growth area. People are adding dedicated, specialized funds along the lines of the strategy classifications, new indices that we're launching. And you also have larger established $20 billion funds that are adding exposure on the multi-strategy, and they're adding portfolio sleeves that are trading these actively. And that's just going to continue to grow over the next 5 years.
How do you expect the changing regulatory environment play into the space, especially given President Trump's pro crypto stance?
Yeah, it's a risk for sure. I mean, you're going to continue to see more oversight of the industry, and that's going to evolve as well. But I think it's going to evolve more favorably than what it has really over the last 5 years, because I think the new administration recognizes this as an asset class and a place that we as a country really want to be. And I think they've used the word the crypto capital of the world, which is something that's, I think, very, 5 or 10 years from now, that will be something very valuable to have established at this point in 2025, and seeing how that continues to grow. But this is going to go from a very small niche specialized industry to something much more mainstream over the course of the next decade. And I think the new administration and the regulators want to see that growth happen. They want to mitigate some of the risks associated with some of the structural components of it, but continue to allow the industry to grow and evolve in the direction that they see it going.
Real quick, Ken, on markets, how do you see hedge funds reacting to the recent pullback and volatility?
Yeah, it's something that we track obviously very closely, and we've seen good results thus far. And again, this is a fluid thing that every day we're getting new information on. But when you look at the data through Tuesday, which we have there, the overall hedge fund index, the HFRX Global, is down about 0.5% for the month of March. And as you know, equities have pulled back between 9 and 15% from the highs, depending on what they're looking at. And some of the areas like equity hedge and crypto have been weaker areas of performance. Areas like relative value arbitrage and event-driven are essentially flat for the month. And some areas are actually up. So it's been a very exciting. I think people were positioned for some volatility, and the strategies that are most positioned have benefited from it. And I think you created a tremendous amount of opportunity with all of this volatility, and we'll see how that plays out for the rest of the month.